Today we review the latest market session using three key indicators: the 10-year Treasury Yield, the S&P 500 ETF (SPY), and the Nasdaq 100 ETF (QQQ). This session shows a sharp shift in market behavior. Stocks moved higher, while interest rates also increased. This combination is critical to understand. The 10-year Treasury yield is trading near 4.24%. This reflects a slight increase during the trading session. Intraday movement shows buying pressure during the morning hours, followed by consolidation. This behavior suggests the bond market is stable, but not pricing in aggressive rate cuts. The 10-year yield is a benchmark for equity valuation models. When yields remain elevated, future cash flows are discounted more heavily. This dynamic reduces upside potential for stocks, particularly in growth-oriented sectors. As long as the yield remains above 4%, financial conditions stay relatively tight. SPY opened near 692 and closed near 690. The ETF finished the session down approximately 0.3%. Several intraday rallies failed to sustain momentum. Each move higher was followed by renewed selling pressure. This pattern indicates cautious positioning by institutional participants. Capital is being preserved rather than aggressively deployed. The broader market is showing signs of consolidation. Upside progress remains limited without confirmation from the bond market. QQQ underperformed the broader market throughout the session. The ETF declined approximately 1.2% from the highs. A pronounced sell-off occurred during the middle of the trading day. This was followed by sideways price action into the close. Technology stocks are highly sensitive to changes in interest rates. Higher yields reduce the attractiveness of long-duration growth assets. As a result, selling pressure in QQQ remains stronger than in SPY. This reflects a broader shift toward risk reduction. The overall market structure remains consistent. The 10-year Treasury yield continues to trade at elevated levels. SPY shows limited upside and repeated rejection at higher prices. QQQ confirms continued weakness in growth and technology stocks. These signals indicate a cautious market environment. Interest rates remain the dominant driver of price action. Until yields move meaningfully lower, equity markets may struggle to sustain rallies.